so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and this morning I had to make a video for you guys. It's 5 a.m. right now. I'm actually about to be on my way to Austin and San Antonio to give you guys boots on the ground intel about what's going on in those markets. You can see my truck there in the background. So I'm finally fixing to head back to San Antonio and Austin, but I wanted to stop real quick and make this video because I thought it was really important, because we just got articles that came out about Bank of America where their customers actually took over $2 billion out of securities from the bank. So a lot of people are wondering and saying, is Bank of America the next big bank to have bank runs? And I know that sounds hard to believe, Bank of America having a bank run, but there's a lot of things that have happened recently that were extremely hard to believe. So although it may seem like Bank of America is too big to fail, it's actually extremely possible it does, as a result of all the quantitative tightening and the systematic failure of low interest rates. So very, very interesting stuff going on. Now, the name of the article that I'm going to start with is a Yahoo article titled, Bank of America Clients Withdraw $2.3 billion from U.S. securities. So it's important to note that's not depositor. That's obviously a little bit concerning, especially because right now it appears that we have the worst bank runs since 1929. And y'all, do me a favor, I'm getting my gas right now. As you can see that, there's my cameraman and drone pilot right there. How you doing, brother? Y'all see how much effort I'm doing trying to get you these videos. Do me a favor, like this video, subscribe if you haven't already, shoot me a comment below, but either way, we'll get started right now. So let's jump into the first paragraph of this article to get a better idea of exactly what's going on with Bank of America, because as you guys know, this is a breaking news story. Now, the article starts, Bank of America clients sold around $2.3 billion in U.S. security. Now, this is according to a note from a bank strategist, Jill Carey Hall, on Tuesday. Although the note failed to highlight reasons for the withdrawals, data compiled by Bank of America showed clients sold both single stocks and ETFs for the second consecutive week, while selling was broad-based across client groups, including institutional, hedge funds, retail, and size segments. So it is important to note that this is more of a stock selling thing. This is not a bunch of depositors necessarily that are pulling their money out of the bank. But regardless, it's really important to stay on top of these things, because unfortunately, problems like this and meltdowns appear to happen overnight with little warning to no warning to the public. So it's really important to stay on top of this. And remember this, we can't even trust the FDIC. If it wasn't for the federal government, the FDIC would already be done. They didn't even have enough money to cover the Silicon Valley Bank collapse. So we already know we can't count on FDIC. So can we count on Bank of America, y'all? I don't know that. To me, even though that $2.3 billion was not depositors, it's still super concerning. So what are their concerns exactly, and why are they pulling their money out of Bank of America? And also remember how many things are putting pressure on the banking industry, such as commercial, residential, and CMBS. Not all banks are doing bad. As you can see here, Charles Schwab nets $53 billion in asset, second highest March in history. Going into the concerns, amid concerns over commercial real estate, the bank, and this is Bank of America, recorded the biggest real estate outflows since 2021 or mid-2021. Now, meanwhile, exchange-traded funds or ETFs posted their biggest outflow since January across all styles, including growth, value, and blend, and across small, mid, and large cap ETF. Not only that, Bank of America totaled $1.2 billion in penalties and in settlements in 2022. So just how healthy is Bank of America actually, and why did they just get done paying $1.2 billion in fines? And one of the predominant reasons is essentially, from what I know, banking fraud. In other words, Bank of America may be in much bigger trouble than any of us realize. Regardless of how good a shape or not Bank of America is in, it seems as though investors are absolutely freaking out. And I had to pull over real quick on the journey, y'all. We've been driving for about 2 hours. We're gonna go get some McDonald's real quick. Actually, Julian's already in there getting me coffee, hash browns, and an Egg McMuffin. But let me go into a little bit more about Bank of America. I'm gonna pull up another article now, so we can better understand investor sentiment and really why they would even pull out money from securities at Bank of America. The collapse of Silicon Valley and Signature Bank sent shockwaves through the financial sector. In tandem with other banking stocks, shares of Bank of America and Wells Fargo suffered double-digit losses last month. So again, Bank of America right now is taking an absolute beating, and really the question is will they be able to make it out of the current banking crisis? The article goes on. Investors are now focused on the share of FDIC-insured deposits as well as the level of held to maturity, or HTM, securities held by banks. In the meanwhile, customers shifting deposits from smaller banks to the likes of Wells Fargo and BofA have not gone unnoticed. In a matter of days, Bank of America took in $15 billion in deposits. So it seems like consumers aren't worried. It's just investors that are worried right now when it comes to Bank of America and the health of the company. The question is whether this calamity represents irrational reaction by the market, and if that holds true, which banks offer the most upside over the long haul and why? I think that's actually some pretty fair questions, especially if you're like me, a consumer that is actually worried about where to keep my money. So I'm sure like most of you, my hard-earned money is actually really, really important to me, and the safety of it. You guys probably noticed I pulled over, second round of gas. This trip is taking forever to, again, we're going to San Antonio, we're going to Austin, but regardless, I'm not trying to, have people freak out. I don't want people to be afraid, but as a consumer myself, I'm hearing a lot of things, about the banking crisis. Bank of America is a huge bank, and it really worries me, not only about consumers having their money, safely in Bank of America, but the entire banking industry. Now let's finish reading this article. This will go more into insured deposits held at Bank of America, and it's going to compare it to Wells Fargo. While both banks rank well, Bank of America has the best level of insured deposits among the bunch. As of BofA's last filing, the bank held $1.9 trillion in customer deposits. So it's worth mentioning because that's an amount of money that we can't even fathom. A metric known as efficiency ratio is a calculation used to determine the profitability of a bank. The lower the number, the better. In the first 6 months of 2022, Bank of America had an efficiency ratio of 67%, while Wells Fargo posted an efficiency ratio of 77%. So when compared to Wells Fargo, the efficiency ratio is actually better at Bank of America. The efficiency level of Wells Fargo is worsened by the penalties paid for the past transgressions. Neither of those numbers are something to brag about. A well-ran bank should have an efficiency ratio of 60% or lower. Bank of America did post an efficiency ratio of 63% last quarter. But we're talking about this quarter, and we're talking about the future, because what we see is an overwhelming amount of pressure and potential black swans that are rearing its ugly head up in the banking sector. And we haven't even talked about defaults. What happens when consumers start defaulting on credit card debt, which is historical right now, by the way. Credit card debt is ballooning, and then not only credit card debt, auto loans. So we got auto loan defaults, credit card defaults, mortgage defaults, commercial lending defaults, and the reality is those boots haven't even dropped yet. So we don't even know the repercussions yet that those events are going to have on the banking sector. But we can really assume that they're not going to be very good at all. So there's probably an overwhelming amount of problems and challenges that are going on behind the scenes that we don't even have any clue about, that we know nothing about. And that's on top of the problems that we do know about. So many problems, y'all, so much dust in the air. And unfortunately, the sad thing about all this is we can't trust anyone to give us, accurate and real information on just how at risk these huge lenders and banks actually are in. But let's go back into the article and start to finish this out. In that same time frame, Bank of America held nearly $255 million in AFS bonds with a fair value of approximately $220 million. The loss of the AFS portfolio totals $5,697 million, or what is that, $5 billion? 5.6 billion. Bank of America held nearly $632 million in HTM bonds, or hold to maturity bonds, with a fair value of just under $524 million. The loss on the HTM portfolio totaled $108,000 million. So substantial amount of loss once again from them investing in securities and bonds, which are normally very, very safe investments, but they were not safe this time around. And again, The whiplash on the interest rates literally rug pulled the entire economy. Both banks are one of the largest issuers of credit card and debit cards, and both banks also operate solid commercial real estate banking franchises. The recent bank failures brought attention to CRE loans with a particular focus on office buildings. The trend to work at home resulted in a steep decline in demand for office space. Morgan Stanley's chief investment officer claims the commercial real estate sector is facing an economic crash that will surpass the 2008 financial crisis. Bank of America has 26% of CRE loans dedicated to offices, Wells Fargo 22% in office space. Furthermore, Wells Fargo is the nation's largest CRE lender. So this is impacting pretty much everyone. And I think it's safe to assume that the big three banks, Chase, Wells Fargo, and BofA, they're at a tremendous amount of risk. Again, we can't even fathom, when they're talking about billions of dollars, we don't know what impact that actually has because we can't even fathom the actual value of $1 billion. But regardless, there is no question we continue to see the banking crisis continue to unfold. And if it's me, like I said, and my money as a consumer, I'm being very careful, obviously not having more than $250,000 in the bank. I'm making sure that they are FDIC insured, even though the FDIC is a bit of a joke. And I'm also debanking as much money as I can, and I'm putting it in treasuries with the maturity date and also precious metals that could be stored off-site out of your house. I'm empowering myself and working on my purchasing power because I believe as a result of all of the collapses that we're going through and will continue to happen this year and into the next few years, that's going to present us with the buying opportunities of our lifetime. And I have put so much of my money where my mouth is because I plan on being a winner in this downturn. Now, other than that, y'all, give me a like for all of the different scenes, all of the craziness that's going on here. And other than that, if you're out there investing in real estate, you know I wish you luck, and I hope you win.